Welcome to the world of capital budgeting, where we turn complex decisions into manageable equations. It's like preparing a gourmet meal. You want to get all the ingredients just right.
Professor, can you explain what capital budgeting actually is?
Okay, capital budgeting is the process of deciding which investments or projects will bring the most value to your business or your life. Think of it as planning your dream vacation. You need to decide which destinations are worth the trip based on cost and potential enjoyment.
Okay, I get that. So, how do we determine which investments are worth pursuing?
Excellent question. We start with present value, PV. Imagine you have a time machine. PV helps you figure out what future cash flows are worth in today's terms. It's like calculating how much a future vacation will cost if you were to pay for it today.
So, PV is like converting future travel expenses into today's money?
Exactly. Next, we have net present value, NPV. This is like your final budget for the vacation. You take all those future costs, discount them to present value, and subtract the initial expense. If your NPV is positive, you're in for a fantastic trip.
So a positive NPV means the investment is good. What about the other indicators?
Okay, now we get to the fun part. The internal rate of return, IRR, is like evaluating how exciting your trip will be compared to other options. If the IRR is higher than your required rate of return, it's like discovering a hidden gem in your travel plans.
So IRR tells us how great the investment is compared to other opportunities.
Exactly. Then there's the payback period, the time it takes for your initial investment to be paid back through returns. It's like waiting to see how quickly you'll recoup the cost of your vacation from the fun and experiences you gain. The shorter the wait, the better.
And what about Profitability Index, PI?
Okay, the PI. Think of it as the efficiency score of your vacation budget. It tells you how many dollars you'll gain for each dollar spent. If your PI is greater than 1, it means your vacation is a great deal. If it's less, you might need to reassess your plans.
So, to sum it up, PV tells us the value of future money today, NPV checks if the investment is worthwhile, IRR assesses the return compared to other options, payback period measures how quickly you break even, and PI scores the return on investment.
Precisely. You're now a master of capital budgeting, ready to make informed decisions that lead to profitable investments or spectacular vacations.
Thanks, Professor. I feel much better about tackling these concepts now.
Anytime. Remember, whether budgeting for investments or planning a vacation, always aim for the best value and enjoy the journey.
Will do. Thanks for the help.
Off you go. May your investments be as rewarding as a perfect vacation. See you next time and goodbye.